The number one question I get asked from most people is when is the best time to buy, sell, or invest in real estate? And on this month's edition of Keeping Current Matters, the National Housing Market Update, as always, we're explaining to you why these things are happening, how they're impacting people, and most importantly, helping you with that answer to your question of when should I be making a change? And so today we're going to cover what goes up must come down, which is not home prices, but overall we'll talk about inventory and what is driving prices up, why rates are falling, and overall what that means for you. Well, thanks for sticking around. We'll dive right in to really what has been happening over the last year, specifically in 2023, which is a demand based on rate environment. So as you can see from this slide, as soon as mortgage interest rates increase above 6.5%, we start to see more limited and or upwards to weak demand. Now, the nice part is you can see from what has happened since March is for about 4 to 5 consecutive weeks, we are seeing mortgage rates decrease, which is bringing out a good demand for homes. Now, when you match a good demand with limited to no supply, there are things that make it great for home prices to continue to appreciate, which we'll cover here in a moment. So as you can see, the turbulence in the financial markets is putting significant downward pressure on rates, which should be benefits to homeowners, borrowers in the short term. As you look at overall, when rates change and those mortgage interest rates become lower and lower over multiple weeks, you start to see a lot more demand come out. But the challenge is, and the question people are asking, well, what's happening with the home prices is that without the available inventory, there's only one thing that can happen is those home prices go up. Now, it's important to add context here. And for a lot of us, we reflect on the past. And you have to remember in real estate, the past is 10-year cycles. The past is year-over-year market stats and month-over-month market stats. So that way, quarter-over-quarter, you can put together the predictions of what will happen in the real estate market. And the challenge is the predictions have been massively wrong for a very, very long time because the media and headlines is where many of us are receiving our information when it comes to market stats compared to local market experts like myself and the real estate professionals all across the world that we partner with. And here's exactly what I mean. When you're reading something that says there are now 210 U.S. housing markets at risk of 15 to 20% home prices, which this was in September 13th of 2022, the challenge with that is exactly what happens when many of us see these headlines that are, yes, from local authorities like CBS News. The challenge with that is that as you look at some studies of neuroscientists, they found that 90% of our lives is filled with narrative circuitry, which really is just what we see, we end up telling ourselves, and that becomes our personal truth. The challenge is, look at the home price appreciation year over year. You could see in Atlanta from January to January, still at 8%. The nation year over year, home price appreciation was 3.8%. So this is a huge miss when you start looking at losing 20% year over year to the nation actually seeing a 3.8% increase. Now, let's also remind ourselves that declines in the West are due to the tech industry slowdown and a severe lack of affordability, which we will cover here in a couple minutes after decades, not 1 year, decades of undersupply. So how do we put this in context is year over year price appreciation by region. So as you continue to look at overall regions, and this is now as of March. So why is it 5.3%? Is in the last 2 months, we have seen month over month continued appreciation home values because we're seeing less and less inventory on the market. So if you take into account from January to January, what was the month over month appreciation? And this is looking at December to January, 0.2%. And what happened in February, March, and now April, When you read our local market updates, we saw some market centers with upwards to 2 to 3% month over month appreciation numbers. So again, yes, for several at the beginning of this year, we still were not seeing appreciation. And I'll show you in a moment where those declines were based off the demand. But now that the demand is rising and the overall inventory continues to remain minimal to none, you're seeing month over month home price appreciation. And obviously, when you break it down by region, we just get a little bit more of exactly what we were talking about in the data of where are things affordable. And as we talk about, though, the overall accuracy from those headlines saying a loss of 15 to 20%, you can look at from January 2022 to now, is that seasonality where it got really bad in July, August, September, you can see the month over month home value declines have stabilized quite a bit. In fact, for most places, now that February, March, we saw appreciation all across the nation, and a large amount of that here locally, is that you're going to continue to see stabilization occur because of, again, looking at home value declines stabilizing. We are just now seeing a nice, almost U-shape market cycle returning back to limited to moderate home price appreciation on a monthly basis and annual basis. And as you can see, prices nationally are now down 2.6% from their 2022 peak. Moody's Analytics repeats it at 2% since their peak of last July, or Freddie Mac 2.5% from its 2022 peak. So as the numbers became very, very low from a amount of historical depreciation, because we've only seen appreciation for so many years and months now, is that depreciation that peaked in June or July, you're now seeing from there to the current period here is across the nation that year over year is only 2.5%. And each month that we start seeing home price appreciation, that number will start to flatten and we'll be back into year over year appreciation, as well as, though, we already are, remember, back to month over month appreciation. So all the people who are waiting, you have waited it out, and now it is time to get back into the market, whether you're looking to sell, buy, and or invest, obviously based off what you can afford, which we'll cover here in a moment. So as we look at how much have prices fallen from peak, the drop in home values since the June peak through February, if we take the blended averages, let's just call it negative 2.5%, is boy, those headlines were massively wrong, because 20% is very far off from 2. So again, continue to connect with your local market experts, because this data, both nationally and locally, is critical and most likely can only be articulated by experts who understand the context and truly can help you predict the next 90 days just to get a little bit ahead of what's happening. And that's how you take advantage of the real estate market, not trying to time it. We will see affordability improve this year. And how do we know that? As we were talking earlier, we'd cover affordability, which is probably the largest issue or concern that we need to overcome historically now. And a lot of that has to do with where home prices are because of what they've risen to, where mortgage rates continue to stabilize and remain, and overall where wages or earnings either continue to grow or stay the same. So each downturn tick in mortgage rates is met with increased buyer demand as many eager home shoppers take advantage of the slightly lower cost of financing a home. And that's exactly what it is. Many people wanted to be in the market. They're waiting for home prices to stabilize compared to the craziness of the last 24 to 36 months. But the challenge is the rates also grew at a historical context in increase, that now that they're coming back down, many of those people, like we said, are ready to be in the real estate market. The challenge is home ownership affordability year over year is declining. As you can see from January 2021, the overall affordability and the index, which we'll share with you here in a moment, which is the Housing Affordability Index from 1992 today, you could see in 2022, we actually hit a historical low since 1990. That number now is rising in 2023, which really is the story for many people, just not the story that they necessarily thought would be told, meaning that most people on those headlines predicted for home prices to decline quite a bit, which hoping for home prices to drop is not going to happen if that's what you're looking for within affordability. What really you need to look at is home price budget overall interest rates, timing it to where they're decreasing, and as you continue to look at it, overall wages and or your earnings. And the affordability historical low, you can see at 101.4 in December, all the way down to 91.3 in October at a peak of some of those mortgage interest rates rising, is now we're back up to about 105% from the overall value. That 100 means that a family with the median income has exactly enough income to qualify for a mortgage. So as that number continues to increase, that's where we'll start to see more demand, most likely. As you can see, the monthly mortgage payments are following directly in line with what we've been talking about over the last couple months. You saw that October, the overall monthly mortgage payment of $2,043 is now down to $1,807. So the payment overall has almost dropped $200 in the last 4 months, while we're also seeing home prices continue to appreciate. Now, this is a very interesting slide as you look at it from the National Association of Realtors. And what it's talking about is this first bar on the left is the median income. The bar on the right is the qualifying income to qualify for the median home. So overall, you can see that the West, you're right, the income I need to qualify for homes, it's very unaffordable. But if you start looking at the South, the Midwest, the Northeast, it's actually very affordable from that of what the median income is. So also remember that when you're hearing this news, you have to take into account from why it's happening across the nation. All right. How is that impacting me regionally and or locally to then take into your specific situation, whether it's functional, whether it's emotional, whether it's a life-changing event. And that is usually the reason to make a change, and then working with a professional locally to decide, is there kind of a 90-day window, as you can see from what's happened over last year, that perhaps would help me with my goal. And for most people, waiting 12 weeks is not necessarily a bad thing, but waiting years doesn't allow you to come back to memories that we may never be able to create again. As we close, you can see the mortgage payment to income ratio from 2000 to 2023. And what this is really saying is that overall, utilizing about 25% of your income to put towards a mortgage is an appropriate and or recommended amount. And as you can see, we're back down to 23.8% of the required payment to income ratio. So for many people, yes, have there been times where home ownership is more affordable or easy from a monthly basis? Sure. But when you look at overall demand and what homeownership does for equity gain and the lack of limited inventory, just because many of us would like to see affordability come down and it may be less affordable, does not necessarily mean that it will ever become more affordable. And what I mean by that is it means that there is scarcity and demand for becoming a homeowner. And the risk is for many people who are renting, and if they do not see wages or earning opportunity increase while rates stabilize and home prices continue to appreciate, you can just unfortunately get less and less home. So if you're in the position to be able to qualify to get your first property, is starting sooner will be better based off historical data and the lack of housing that has been compounding for decades. And for many people who are looking to sell their home, for which we specialize in, is that it's all about the understanding of the market and your situation, as you can see, to figure out how you want to time it. So to close, as we look at this rate drop was enough to make home buying affordable again for many Americans, as the $200 change, yes, is a big difference for many people. Is what is the one thing that could stand in the way of your success this spring, though, while you enter the home buying, selling, and investing market, really is our overall mindset, which is making sure that we have the right context to any of the things that we're hearing, reading, and or saying to ourselves. Because for some people, if we've been waiting, the wait truly now is over to take advantage of some great benefits, unless there's another situation you're running into that needs to be discussed. If we're predicting for a market to do something that we believe it will, however, there are no indications to any type of major slump, release of inventory, or home prices depreciating, again, my mindset may take me away, as many people have over the last several years, to entering the buying, selling, or investing process due to the fact that what I thought might happen really never did. And for many people, that's not the story you want with real estate, because real estate is a long-term investment and something that over time continues to compound. What it is just most people that I know, what they want to make sure that doesn't happen is that they timed it completely wrong and made a bad decision. As always, reach out to me, schedule a 15-minute consultation, and we can talk about your situation. If you're across the nation, I can connect you with top professionals that are local market experts. So then that way you've got the right context and information to make a decision. So from me to you, hope your families are safe. You're looking forward to summer, getting some time with the people you love. And as it is already happening in Colorado, the market's warming up and so is the weather.